The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon or good morning, depending on where you are across the country. This is Mike Finko. I'm co-chair of Startup Maryland, and my day job, CEO and president of an early-stage startup named CloudTrack, based in Annapolis, Maryland. And I want to thank you all for joining us here as we are presenting an Idea Center best practice under the Startup America Partnership Idea Center, which many of you that are joining us as state champions across the country will know that that is a great resource for a lot of information about best practices that some of the other Startup America regions are incorporating into their day in and day out operations. The one that we're going to be doing today is focused on the recently secured and populated Maryland Venture Fund, which is a repopulation of that instrument for early stage investments and innovation and helping jumpstart and really getting our innovation economy going in Maryland. Joining me to kind of walk us through how it was done and some of the mechanics behind InvestMaryland and the Maryland Venture Fund is Christian Johansson. He is Secretary of Maryland's Department of Business and Economic Development. And Christian really is the architect behind the InvestMaryland initiative. That was kind of the branded name of the repopulation of the Maryland Venture Fund. So from a lot of perspectives and kind of being sensitive to the fact that we have many audiences joining us on this call, some of you are entrepreneurs, some of you are in the champion ranks within the Startup America regions at other states, some of you may be on the legislative side and policy side, possibly within the states and commonwealths, looking at maybe repopulating or even creating venture funding as a public initiative for your organizations. So we'll kind of cover it from a lot of different perspectives, give you a sprinkling of kind of where does Maryland rank in the bigger picture of innovation and where the economy kind of has its nexus point for early stage, and then also ramp up and speed up industries and companies. But we figured we'd talk a little bit about kind of where, what is the current situation for early stage funding and kind of where is it? Many of you know around the regions and through what Startup America is doing is that obviously early stage companies and high growth, high potential companies are the drivers of jobs. They also are the drivers of coming out of down economies. And we feel that we're in an interesting position right now with markets priming. A lot of private sector investment dollars have been idle for a couple of years, maybe on the sidelines. Some people kind of point to it that way. And I think there's a need and a gap right now that many of us as entrepreneurs and management teams of startup companies are experiencing challenges in securing finance. So what we wanted to do was highlight how Maryland did it in the last couple of years. I'll let Christian kind of talk about a little bit of the timetable, the history, the mechanics, the legislation. We're going to spend the meat of this conversation on how was InvestMaryland done. And where are we now also? We wanted to talk to you about kind of how that money is being put in place. Obviously with venture capital being the driver of a lot of early stage and high growth initiatives and companies, we within Maryland are very fortunate that a lot of the strong brands that you recognize nationally and internationally have been fostered here, grown here, stayed here. Some have left, but we're working on that, and kind of the recruitment of bringing some others in is one aspect of where the Maryland Venture Fund and the InvestMaryland initiative comes into play. I think it's no surprise for everybody that venture capital dollars in motion has declined recently. You know, if you look at the last 4 or 5 years, this is not going to be a surprise slide for anybody, and if you're out in it, you're struggling with it as early stage companies. Seed stage investment also is really under the gun right now. Combine that with, in the last 4 or 5 years, with some of the challenges of IPO and initial public offerings as a financing route for a lot of early stage companies, it's kind of a double whammy for companies that are hitting that high growth stage. And that was one of the real sensitive elements of looking at repopulating the venture fund and really going forward with the InvestMaryland initiative. Looking at kind of the bigger picture, there's some slides like this that Startup America has up on their website, so take a look at them. This was one that Nick and Christian at DBED had kind of put together with us to kind of let you know where the different pockets of seed stage capital and venture capital really exist around the country. We're very fortunate here in the Mid-Atlantic, not just in Maryland, but also looking at Northern Virginia and D.C., Pennsylvania, and the Carolinas. We are probably in the top 2 or 3 as a region for innovation and venture capital. We're very fortunate about that. Obviously, everybody's looking at Silicon Valley, and that's the bellwether. But we don't necessarily want to reinvent ourselves as the next Silicon Valley. We're very proud and very fortunate to have core industries from pharma and life sciences to information technology, cybersecurity, cloud, and a very rich manufacturing heritage and economy here in Maryland. So I just wanted to hit on some of those points real quick as we kind of jumped into the call. A little bit of housekeeping for those of you who have not joined a GoToMeeting or a GoToWebinar. You're going to be in listen-only mode for the webinar for the majority of it. We do have a questions tool set that if you look on the ribbon bar on the right-hand side under the instructions for the webinar, you can ask a question either directly to us, and we'll keep an eye on that as we go through the webinar. We'd love to keep it dynamic if people have specific questions as Christian gets into some of the meat and the details of how it's done. By all means, use that mechanism to let us know you have a question. We also will try to leave it open at the end for about a 5 or 10 minute Q&A session. So with that, we're going to kind of jump into the meat and potatoes of kind of how Invest Maryland works and how it happens. So let me introduce Christian Johansson.
Well, pleasure to make everybody's acquaintance. I'm Christian Johansson. For the next 2 weeks, I will remain the Secretary of the Department of Business and Economic Development, and I'll be heading back to the private sector to run a business again. But let me give you a bit of background here. When I first came in, some of the facts that struck me as quite extraordinary, especially here in Maryland, was that we were #1 when it came to basic research for federal research. If you looked at the total dollars, we were #2. We only have 2% of this country's population. There was a tremendous amount of research that was being done here and invested here. But despite all that, we were 42nd in business starts. So we had a challenge not only from a capital perspective, but frankly also from a cultural perspective. But venture capital is a necessary ingredient. Another thing I'll say here from a public policy point of view, if there's those folks from states out here thinking about this, when we were looking at why do we do this, I thought that the Kaufman data was especially illustrative because you take the last 30 years or so and the majority of jobs have been generated in companies 5 years and younger. Now, if you want to drill that down one further, what you find is that 1 to 2% of companies tend to create the vast majority of those jobs, 80 to 90%, depending on where you look at the data. And a lot of those, guess what, were venture-backed. Venture capital is a critical ingredient. It is not a necessary only, but it's critical. So what did we do to really accommodate this? So we, and I'm going to get through how we did this from a public and a political perspective before. Let me walk through how this program works first, and we can get into how the politics of all this work, because it didn't happen overnight. We essentially convinced the legislature to let us auction $100 million of insurance premium tax credits. And the proceeds of that auction, we would be allowed to invest into venture capital through a public-private partnership. Before we did this, by the way, we looked at every state in the United States. We looked at internationally and said, what have states done? What have they done right? What are the best lessons that we can take from other states? Because, frankly, a lot of states have been very innovative. So when we did this, we auctioned this $100 million. First off, a lot of folks said, this is never going to work. No one's auctioned the insurance premium tax credits before. The insurance companies aren't going to want to buy this kind of stuff. And lo and behold, we ran an auction in my office and had an online auction. We raised $84 million.
Oversubscribed.
It was way oversubscribed. The legislature thought at best we would raise 70. So we way topped off what they thought we would be able to raise. So $84 million raised. Now, by legislation, 2/3 of this money will be invested by private venture capitalists. And so what you see here on this slide is 2/3, $56.4 million, going to private VCs, who in turn invest that into early stage companies in the Maryland ecosystem. The money that they get has to be invested in Maryland. It's not best effort. It has to be invested in Maryland.
And this is also part of, just for folks who are kind of listening in that may be on the venture capital side and kind of understanding how it works in Maryland, it's kind of a public-private where these are active leading investors, venture capital firms that have a presence and have made investments in the state. And it's pretty much a guarantee and a commitment that they're going to be active and also adding their own funding dollars to supplement what the state is creating.
And let me also say, on this slide, it's very important, we separated the politics of this decision out in terms of how we selected the venture funds. We picked an independent board. It's actually an independent authority. And maybe we'll get to that later in the presentation, that selected some of those venture capitalists. Now, if you want to go to the next slide, what's interesting, the way we structured these, the deals with all these VCs is that this is really based on market terms. We expect them to return 100% of the principal first, charge a reasonable management fee. I think we cap up at 2.5%, but not all of them are at that, and return 80% of the profits. And the way it works is that the money that we put in, the 2/3 that you see here, the 56.5 or 4 million that went to private VCs that in turn invested into Maryland companies, all that money that's returned to the state will be returned to the Maryland General Fund, and that will be able to support teachers and police and whatever type of investments that are important for the state's economy. And it will be a direct sort of dividend back to taxpayers. Now, you want to go to the next slide? And so what's interesting here is that we also took 1/3 of the capital, and we actually put that into Maryland state venture programs. Now, we have a long history, and I'll get into it a little bit later, our Maryland Venture Fund, but we are able to do earlier stage investments than most VCs. We can do a $50,000 investment, a $100,000 investment into promising companies, and we do that frequently. So we thought that it was very important that 1/3 of this money really be allocated to those types of investments that are really dealing with seed and really early stage, because frankly, that's where a lot of the pain is right now. Now, if you took all the money, the $84 million, we estimate that the majority of it will go into early and seed, if you take the whole thing.
And that's one important point that we all discovered as we kind of got through the last 2.5, 3 years of mobilizing around this piece of legislation, this initiative, and how is it going to be implemented. And from my perspective, I got involved with kind of the testimony from the entrepreneur ranks that was important in kind of mobilizing to help the Assembly and the legislators understand that there was a groundswell of need, that the entrepreneurs themselves were facing these challenges of that gap funding level that Christian talked about, and with 1/3 of the dollars being earmarked for and available for that, it really put Maryland in a unique position to kind of attract but also maintain that early stage, even from tech transfer to creating the company or building it from your own efforts. As an entrepreneur, that was a critical element on the mobilization side of getting that buy-in from the actual entrepreneur community. So just something to keep in mind there.
And I think on this slide, too, what's important here, you see that there's two sort of lines here. The one that's going to the state programs, that's $27.6 million, and the one that's going to private VCs, that's $56.4. What's interesting here is that, A, we've caused a number of venture capitalists from all around the country to look at Maryland. When we opened this up, we had, I think it was 37 qualified VCs, because that was an application process, 37 high-quality VCs that most of them weren't from Maryland, but had an interest. And so we had a lot of people really look at Maryland. And the second thing is, obviously, the ones that we've selected, we have a close working partnership with it. So, for example, our venture fund that does really early stage investments, we are asking all the VCs that we're interacting with, if you see a promising company that's a little bit too early for you, we can be the first money in. We can take a higher degree of risk through our Maryland Venture Fund, and it can advance to the stage, hopefully, where you will take a closer look.
And that deal flow aspect should, cannot be underemphasized, the importance to the entrepreneurs, knowing that gap air cover is there. If they get denied from an angel group or a VC fund, that the state has some opportunities to really help them maybe get over a critical operating capital need.
Let's go to the next slide. I think this is another important point. For the state venture fund that we have, the Maryland Venture Fund, the money and the proceeds that we actually make from that, they're not returned to the state general fund. They actually get returned to this agency, the Department of Business and Economic Development, and they stay in the venture program. So what we've created on the early stage side here, on the very early stage side, is an evergreen fund. You know, that's something that we're obviously hoping will yield dividends for a long time to come and enable all kinds of investments. So what you're seeing here is the basic flow chart of how this program works. It is a true public-private partnership. We have top caliber venture capitalists that when we selected them, which I neglected to mention, when we selected VCs, we actually, by statute, had to hire a professional advisor to advise the Maryland Venture Fund Authority. They hired the same professional advisor that selects funds for the pension fund. And what we've been told by them is that we absolutely have a top-tier list of venture capitalists that have all applied for the program. Obviously, that's going to make a big difference, having quality investors involved and engaged. And that's something that we're very excited about. But more importantly now, next slide, is that this isn't theoretical anymore. We're actually making investments. And what you're seeing here are investments that have happened since September. And so on the left, you're seeing companies that our Maryland Venture Fund has invested in the last few months. Companies like Plasmonics or Xenos or BrainScope, Maxtena. You know, what we're seeing here is a mix of tech and of biotech and or healthcare, I should say, because BrainScope is healthcare more than it is biotech. But we're obviously very excited, and it isn't theoretical anymore. Every month we're announcing a couple deals. What you're seeing on the right is GrowTech. You might know GrowTech from investing in Living Social and other things. They've been in the business, Mike, what, for 30 years? Or, yeah. I mean, yeah. They've been in it for a very long time. We put $12 million into them. Tomorrow there'll be another announcement. You're going to have to stay tuned, but I can tell you it's a couple more VCs that we're announcing, and it will rival the amounts of GrowTech. So we are actively putting the money to work. It is not sitting here on the shelf.
And one point to kind of highlight here, as you know, in our role with Startup Maryland, we, you know, as many of you as champions for the other startup regions around the country, you know, you're trying to identify where do you fit into the mix, and really one of the key areas where Startup Maryland has kind of identified where our grist and rubber hits the road is really engaging the entrepreneur class directly and really helping them, you know, in some aspects, you know, coach them up. What do they need to know to kind of inflect their businesses and move forward? Also, you know, what are some expectation management sides of how do you become a good candidate for funding at the different stages of inflection, and what are some resources that are available to you? So, you know, in this call we're talking about InvestMaryland as an initiative, and that's through the Maryland Department of Business and Economic Development. But in the private sector, we also become a kind of a deal flow, you know, not a gateway, but a deal flow player with the private sector investment groups, both angels and venture capitalists. And then there's also another community of rich dollars that are available within Maryland that is a little bit more on the tech transfer and early stage through a group called Maryland TEDCO. So Maryland actually has quite a diverse community of investment options available to entrepreneurs. And I think one of the main elements from the state level above and kind of overarching it was that we've had a venture fund in the past that was very successful. It was time to do it again. The impetus and the need was there. With the way that the macro market for early stage had gone, it really left a lot of gaps for Maryland entrepreneurs in kind of really making the decision to build a company, hire staff, go after certifications, you know, attract outside funding if needed, and really give them a track to run on.
Yeah, and we can go to the next slide. I think it's important because for us, we're not doing this as a one-off effort. If you look at the O'Malley administration, when we laid out a plan, we basically had 3 core things that we've stuck to That's our core and basic strategy when it comes to economic development. The first thing for us was to focus on strengths and to really build credible plans around the areas where we thought we could win. So in biotech and life sciences, in cybersecurity and other areas like it. And we're deploying hundreds of millions of dollars to support those industries. The second thing, and that's what we're here to talk about right now, was really a clear focus on entrepreneurship and small business and really creating an on-ramp from commercialization to company formation to job creation to, yes, wealth creation, right? And that on-ramp has many things, but venture capital is a really important part. And how do you measure success for all this stuff and impact? And, you know, if you take our former venture fund that we seeded with $25 million 17 years ago, it has returned $67 million to taxpayers. We have made money on it. I think this is very important. About $1 billion of private capital followed our money into the companies that we helped seed. That's an extraordinary amount of investments. Again, we can be that public spark, that catalyst that ignites more investment. Equally important, 2,000 jobs created. And so we actually, with our first venture fund that we created here, had an incredible impact. And what we're looking to do here is at a whole nother scale. And hopefully the numbers will scale with it. And that's very important for us because at the end of the day, for all of you in the states, you're going to have to make this case to legislators. You have to bring it back to things they can understand. And, you know, everybody understands a return on investment. Everybody understands thousands of jobs. Everybody understands when you're talking, you know, in the billion-dollar range of private capital investment. And I think those are the kinds of things that in your respective states, if you're thinking about this, really making the case. Now, when we structured this program, we wanted to structure it in such a way that it was going to be beneficial to the state. And one of the things was, how do we spread the cost out over a number of years? What we did was the tax credit that we auctioned, $100 million worth, companies can't start taking them until 2015. And they actually, well, actually 2014. And they run over 5 years. And so what happens is that the fiscal impact to us is spread out evenly over 5 years. And it's mostly in the future. And the important part about spreading it over the future is like 2014 to 2015. That's actually in the time frame when we start seeing returns from the investments we've made. So hopefully this will be a program that pays for itself. And you know, the other benefit that we set up here was, if you look at a lot of states that have done venture programs, one of the challenges that we had was that the way they'd structured the arrangement with the VCs was it was not really based on any sort of market terms. In fact, most of those states didn't see a penny back. One of the things that we did was, in making this a public-private partnership, all the money that we put on the private side, the $56 million, the returns, which are based on market returns, I mean, we get 100% of the principal back and 80% of the profits. Hopefully, now that will exceed the money we put in, and B, it's going to go back to the state general fund to help pay for necessary state other types of services. So legislators, when we looked at this, said, yeah, I could actually see this coming back. And this isn't something that's, you know, pie in the sky or anything like that. Third thing here is that this isn't best effort. This is actually, you have to invest this money in Maryland. And I know that for some VCs, well, what if we have bad deals? Well, what we told them was, return the money to us. You don't have to deploy it if it's a bad deal. You know, and clearly, we don't want them to do bad deals, but we are confident that the amount of money that we're putting to work, that given Maryland's innovation economy, it shouldn't be that difficult to find high caliber investments.
And one thing that we found through our mobilization of the entrepreneurs as Startup Maryland is that we're seeing a lot of the return entrepreneurs, serial entrepreneurs that are now getting the opportunity to kind of come out with their second and third opportunity and company. And I think that confidence of kind of, you know, staying here and being able to do it in Maryland, again, is important. And like we said, those gaps in funding being shored up is also, you know, not just a recruitment tool, but it's also a retention tool for a lot of the entrepreneurs that want to do it again and don't want to supplant their families and move elsewhere.
Yep. And, the other thing here is that, we could speak very credibly that there's a path to job creation. When you talk to your legislators, that's the first thing that they understand. They understand jobs for their communities. And we could speak to the Maryland Venture Fund as an example, and this is really around this. Now, beyond all this, this is an incredible marketing tool for us. And we're using it everywhere we go because we fundamentally believe that the best economies will come from attracting the smartest, most talented people to want to build their companies here, to really want to come here to be a part of our community. So it's been phenomenal from that point of view. Do you want to go through the next slide here, sort of key aspects? Now, I brought this up before, but this is really important because this is where you can get in trouble. You have to depoliticize the process for putting money out the door and to investing in these private VCs. We set up an independent authority, and by law, the governor doesn't sit on it. I don't sit on it. These are folks that have experience in venture capital and are, equipped to make good decisions. Second, by law, they had to hire an independent consultant. And like I said, they hired the same venture consultant that the Maryland Pension Fund uses to allocate billions of dollars. So they had a very high caliber advisor. As far as putting the auctioning the tax credits, by law they had to hire a consultant to run the auction. I got to tell you, I worked the phone. I probably called 50 plus insurance companies that were buying these tax credits, and I made a personal appeal for them to be a part of the auction. All this has to make business sense. It always does. But I would encourage you, if you look at this, get your senior appointed officials involved because it makes a difference. I had a number of them that said, that call made a hell of a difference. I actually took a serious look, and we bid, and we decided to be a part of this. And so another key part here is really having good people to run that auction because if you're putting $100 million to work in tax credits, you want to get the most for your money. And so clearly, for us, we believe that we've had so far structurally a favorable outcome. We have, we really have a process where we pick great VCs, and we have raised a lot of more money to invest in those VCs than anybody imagined when we first started this thing. Now, doing this is a long process. I started out working on this in 2009 and just sketching ideas out. We spent the latter part of 2010 really doing the research because the fact is that if we were going to do this, we had to do it right. And it was a coalition, and this is important. There's no governor that can say, we want to will this into action. This was really a coalition of venture capitalists, of entrepreneurs, of academics, of business leaders, of folks from incubators. This was the entire entrepreneurial ecosystem. They all showed up, and they were a part of shaping the program. They made the legislation work because we went through it with them, and by the time we dropped it, they had been so involved and engaged that we had a great piece of legislation. When we actually announced this, in this picture, you see myself, you see the governor, you see the president, the chancellor of the University of Maryland system, and the president of Johns Hopkins. Interestingly enough, the chancellor and of the public system and the president of Hopkins had never testified on a panel, or those two roles had never been on a panel, I think, in 30 years together. So this was clearly important for all our stakeholders, and they realized this was important, and they showed up, and that's why this passed. And, great ideas fail all the time. And so I would encourage you, and Mike can really speak to this because he was so important in doing this. We ran an InvestMaryland Day. We had 300 people show up when we actually had testimony, but we're packing the room and making their presence known to say this is something that's important. And Mike, you were a really important part of that.
Well, I think it speaks to and mobilizing around technologies and innovations that were available. I mean, we had a streaming media pit out in the lobby while the testimony was going on inside the room. We were capturing one-on-one interviews with some of the influencers and entrepreneurs that could benefit from this and really getting their perspective on it. And then we mobilized that around social networks, and the viral side of it really came to pass in those critical weeks and months after the Invest Maryland Day, when we were basically going down the halls and talking to the assembly members and saying, hey, here's an entrepreneur that you may know from your backyard who's saying this is really important to me. So don't underestimate also the mobilization of your entrepreneurs and the influencers, the economic development agencies at county or township levels, the incubators and accelerators that Jonathan mentioned. We're very fortunate in Maryland that we have a rich and diverse community of influencers in the early stage that understand the innovation economy that Maryland has and what it can be moving forward.
Now, one of the things that we wanted to do, now that we have a program in place, again, we believe that this is a big marketing tool, and we want to create a very robust business or robust pipeline for the Invest Maryland program. So one of the things that we've started is really a nationwide business plan competition. And we're giving away $300,000, 3 major prizes, $100,000 each. One is in bio, one is in tech, and one's in general business. Bio and tech are restricted to Maryland companies. The general business is open to sort of anybody from anywhere that wants to participate. But, we've gotten 260 applicants. And let me tell you, this is not a business plan competition, it's a business competition. So the 260 that we were talking about here are businesses that have traction already. And so, this is our first year we're running it, and, hopefully we'll double that next year and we'll double it again. And so this is one of the ways in which we're creating a great pipeline for the Invest Maryland program, because right now we want to put money to work. We want to put it to work into great companies. And we don't really care where they come from as long as they're willing to establish that business right here in Maryland. So,
yeah, and one thought to kind of point out, I'm going to flip over to another slide here for your view. Once again, for those of you that are, state champions and regional champions, how did we as Startup Maryland kind of fulfill a role in mobilizing? One of it was the awareness of what it could do for entrepreneurs and getting their opinion on it and their perspective on it. That was important during the run-up through the Invest Maryland Day and beyond, and getting the votes in. But then as we started to look at what are some activities that we can do, kind of owning that relationship with the entrepreneurs and getting out in front of them. So many of you who have joined us at the regional summits over the last year plus know that we did the Crazy Bus Tour. We called it Pitch Across Maryland, and we basically wrapped the bus in the Startup Maryland logo and basically put a video studio in the back of it, and we went around the state, and we basically asked not only the incubators, accelerators, and academia to reach out to their entrepreneurs, find the best innovations. Some of them did kind of pre-pitching ahead of time to qualify the folks to get involved, but we welcomed anybody. If they met us at one of the stops, they could come on and pitch their business. So we did that as kind of a way to mobilize the awareness of what's coming, not only through Startup Maryland, but together with DBED as a sponsor and TEDCO, some of the resources that were becoming available to them, and the Invest Maryland dollars and the venture fund being one of the main ones. We also realized that this was going to be a couple-month period of time where we were going to be in front of the entrepreneurs as we ran around the state. We were going to bring their videos up above the radar screen, allow the media to understand what's coming out of Maryland, what are some of the unique innovations that are here, in their own words. Nothing really exemplifies the passion and the opportunity in an economy that Maryland has than its entrepreneurs talking about their own businesses and where they're taking their companies. So we did a little video competition of our own. But that also was tied in with DBED on the back end, knowing that the Invest Maryland Challenge was coming in the next couple of months, to kind of be a deal flow lead point for the team that was going to be evaluating and recruiting companies to participate in the Invest Maryland Challenge. Now, we weren't the only source, but we had about 222 companies come out and do a video pitch on the bus for the months that we were on the road, and it's no surprise that a good number of them were recognized and were asked to maybe participate and apply for the Invest Maryland Challenge. So, we also had some folks from outside the state that are involved with the Invest Maryland Challenge, and may get some resources and some opportunities to bring a presence here into Maryland.
About 10% of the companies that applied are out of state. So, next slide really just shows the timeline once the legislation had sort of passed. if you sort of look at it, the Invest Maryland program, it became law in July of 2011. And a month after that, it had its first sort of meeting of the Invest Maryland Authority. And they were sworn in, and they started hard at work, and they needed to define a number of things. They needed to define how that auction was going to be run. They needed to do an RFP to select the consultants that were going to actually run the auction for us. They also needed to pick who was going to be our investment advisor and help select venture funds. They worked expeditiously. They had the auction for the Invest Maryland tax credits in March. It was March 15th. We received the first batches of money from that auction in June, and we made our first investment in September of 2012. That was BrainScope. And obviously, we're at the stage now where tomorrow we're going to announce another couple. We've already invested in growth tech and venture capitalists. We're going to announce another couple of venture capitalists that we're putting money into, sort of that will help us invest money into Maryland firms. Directly, we've made about a half a dozen investments through the Maryland Venture Fund. So there's a lot of activity. We're excited. It's real. It isn't something that's on paper. It's something that anybody can do. And what I think is really, for a lot of states that are thinking about this, that are hard up because of budget times and everything else, you can do this without federal aid. I mean, we had some very challenging budget times, but since these tax credits are spread over 5 years, and they don't kick in until 2014, they go through 2019, it isn't a huge impact any one year to the budget, A. And B, if we're doing things right, we should be returning capital within the same time frame as the budgetary impact hits. So this is something you all can really do. Next slide, because on the next slide there's actually the guide to the manual. We put together a manual, so anybody that wants to use our ideas, change them, come up with better ideas, because my guess is if you do this, you'll probably have some ideas that we didn't think about that are probably better. You know, that's evolution. But at the bottom of this slide, you see bltmo.re/Invest Maryland. That is where you can find the Invest Maryland manual. And it will go through the whole process. So,
in addition to that site, obviously, if you want to have some direct touches into DBED and the team that is now fielding, you know, the Invest Maryland Challenge and the Maryland Venture Fund, you know, Christian, you guys have kind of made yourselves available after the fact for questions and answers. We're getting some questions coming in. We're going to hold them till the end, so bear with us. But they're the same playbook, if you will, and I think we did kind of package it and term it as a playbook.
Yeah, Maryland playbook.
It's actually up on the Idea Center with, I think, the whole legislation, if I'm not mistaken, is up there.
Yes, and one thing I'll say is that we're actually introducing some minor tweaks to the legislation this year. They're very technical in nature about, you know, very technical in nature. We figured out workarounds for everything, obviously, but we want to make sure that the legislation is as flexible as it needs to be. And so as we make those changes into the legislation, very minor ones, clearly that's another thing you want to stay tuned for. If you're thinking about passing this, I would recommend that you reach out and you speak directly to our Maryland Venture Fund and our attorneys as well, because anything that we can do to help, we're happy to help.
And you know, I know we'll also, through the Startup America National team, make sure that those resources are easily accessible. If you're not up on the Idea Center already as a champion, we've learned a lot. We've also gotten some great ideas on some of the efforts that we're going to be doing as Startup Maryland into next year. We kind of wanted to highlight a little bit about where we are and kind of where we're going as Startup Maryland, kind of leveraging some of the experiences that we had last year, but also knowing that this, you know, venture fund and the Invest Maryland resources are now being actively deployed, not only gives Maryland, but our efforts through Startup Maryland, there's a fair amount of credibility when we go out to the entrepreneurs and say, hey, when those gaps of funding and operational capital that you're maybe struggling with finding in the last 2 or 3 years, there really are some good avenues and opportunities to pursue. And one way that we're doing that is with the help of Startup America at the national level. Under their Accelerate program, we're really mobilizing around our Startup Maryland champions. These are basically entrepreneurs, either newbies or serial entrepreneurs, that we're involving in the direction of Startup Maryland moving forward. And through that, they're also getting access to partners like DBED and TEDCO and the incubators in the academic environment to kind of help them find the resources that they need to really inflect and move to the next level. The theme that we're kind of rallying around is really Maryland, to a certain extent, almost offers an unfair advantage for early stage companies. And there's a lot of directions that we're going to run with in that. But we're going to be announcing some things coming up as far as big ideas for Startup Maryland and kind of where we want to take it moving forward, extending on what we did in 2012. So for you guys as regions, as you're looking and maybe working with your legislators and policy advisors, the private sector investors to mobilize around a venture fund, there's a lot of moving parts, if you will, that you want to keep your hands around and be able to mobilize your entrepreneurs to have an impact. So with that, I mean, that kind of ends the prepared comments that we have. I think we're at about 45 minutes here, surprisingly right on schedule. But we wanted to also open up to some of the questions that maybe have come through. So, Christian, here's one I think specifically. Does InvestMaryland co-invest with angel groups as opposed to VCs?
Sure. When you look at, let me explain that, because anybody that had an investment track record that could sort of pass mustard could have received an allocation from the Maryland Venture Fund. But, I mean, the fact is you were competing with, again, some of the best investors in the business. So for an angel group to have received, the money probably would have been unlikely. Having said that, the Maryland Venture Fund, remember, 1/3 is going to a state fund. We frequently co-invest with angels.
Absolutely.
And so angels will be putting money into a deal, and we'll be putting an allocation in as well.
Yeah, and I think for some folks to understand that might be around the country and other regions and pockets is that, here in the Mid-Atlantic, a lot of deals are done, through a syndicate or a team approach on investments. It's just kind of the way it often happens here in the Mid-Atlantic. And I'd say from the early stage, there's a lot more activity in angel groups getting together and investment collectives at the angel level and early stage. And I think that, to Christian's point, is that there's a certain amount of the Maryland Venture Fund dollars that have been allocated to the professional venture capital firms that are, accredited at certain levels. But it's just the nature of this economy in Maryland and the Mid-Atlantic, where some of the early stage companies that get angel funded through that gap period, the Maryland Venture Fund may become a part of those deals and very active in that community and in those ranks. So that's one of the key benefits. Great question, and thank you for that. We were going to ask kind of a couple of opinion polls of you guys joining us, and why don't I jump into one of those? For those of you that are joining us from the regions within Startup America, we're kind of curious, which of you are either in the process of maybe reaching out to your assemblies or legislators, or maybe through the governor's camp on raising a venture fund. We're just kind of curious to know what the market opportunity is out there. Looks like 2/3 of you are. The rest are not sure. So I don't think there's any hard no's out there in this audience, but thank you for that. That just helps us give some perspective. We'll also funnel that information and feedback back to Startup America, and also reach out to some of you directly. If it is something that's in your future, we want to be available to you guys either as Startup Maryland or DBED to help you move along that timeline. The other one is more for the entrepreneurs that are on the call. So, really, for the entrepreneur attendees, what stage is your company at? And we kind of are following the breakout of how Startup America looks at the space. Are you an idea stage company that, your financing needs are often a little bit more challenging and nascent than some of the folks that are kind of the early stage startups, which, we're defining as kind of under $1 million in run rate revenue, ramp-ups being in the $1 million to 10, and then speed-ups over $10 million. Obviously, most of the speed-ups have gone through the early stage financings that they would have needed, but it looks like we have the majority of our folks are early stage, and then the balance are in the idea stage. So thank you for that data. At that point, we're kind of up on 50 minutes. We had planned to keep this nice and tight under an hour, so we're right there. We'll open it up to a last few questions or comments if you have them. Once again, we'll make sure that we follow up with the folks in the Startup America regions around the country, also through the national team at Startup America, to make sure that that legislation playbook and then some of the materials that we've added and maybe this PowerPoint deck that we used can be made available in the Idea Center as well up on the national site.
And let me just say that if you guys have an effort, any of the states that are thinking about doing this, there's a lot of us here that this was something that we were all very passionate about. If we can be helpful, don't hesitate to let us know. This department has a lot of institutional knowledge. You know, I'm happy to give my 2 cents when I'm in the private sector, but there's a lot of people at the department that know how to do this. And I know that a number of them would be willing to really to talk and to give advice and ideas. And like I said, the playbook is there. So this is not, the roadmap and the legislation is there how to do this, if this is something that has appeal in your states.
Right. And, you know, just from one perspective, I mean, with the states surrounding Maryland, there has been, you know, like we said, that ecosystem approach of, you know, Maryland and Pennsylvania or Maryland and Virginia and D.C. kind of getting together and kind of cultivating, you know, not just individual companies, but industries. I mean, I think what you see here in the Mid-Atlantic is that obviously the government market and the public sector research dollars that are flowing both in Virginia and Maryland and even in the district are a nice impetus behind some of the tech transfer that is occurring from federal labs. And Maryland is probably one of the, you know, biggest beneficiaries of that core research that's being done in this area. And we attract a lot of, you know, PhDs and researchers to come to these federal labs that are just inside our state borders, and then also possibly reporting downtown in the agencies. The key for any state is to realize if those assets and those dollars are flowing on the research side, there's intellectual property there that could maybe be transferred and commercialized. And there's a lot of attention in Maryland in doing that, capturing that, helping those entrepreneurs not only find what could be leveraged and brought out to market, but then also building the companies and keeping them here in the state or in the region. So, you know, I know it's a subtle thing, but that is when we say it's a big marketing component to the venture fund and InvestMaryland. We like where we are, being in the top 1 or 5, depending on what perspective you look at, with research dollars and startups being formed. But we want to maintain that and actually make it an attraction from a recruitment perspective and bringing folks in. So we also are working with the states around us on some of the initiatives in Startup America that you know, really take a little bit more than one geography to get them done. So with that, we're going to wrap the webinar at this point. By all means, keep in touch with us. Let us know any questions that you might have personally, and we'll funnel them along to Christian and the team at DBED. And then if you have any questions about mobilizing around the entrepreneurs and the influencers, if you are going to be moving forward with this type of an initiative in your region, we at Startup Maryland are available to kind of help you with some independent perspective there. So we want to thank everybody, and Christian particularly, and the DBED team for putting together the materials and really allowing this to be something that's a best practice playbook for the regions to use and kind of not having to reinvent the wheel and maybe avoiding some pitfalls as you move forward. So thanks again, everybody.
Thank you.